Can you imagine a $2,400 investment turning into a $9 million loss? This is the story of the unluckiest trader in history. It was April 2020 and the perfect storm was being concocted for the collapse of the oil markets. The pandemic had brought the world to a standstill and the demand for oil dropped drastically. At one point, demand even dropped by 30%. The world had never seen anything like this in the last 40 years since the world's oil markets developed. However, the fact that the oil giant Saudi Arabia and Russia would break into a price war did not make things better. As supply remained stable and demand reached historic lows, the industry quickly began to run out of space to store oil. This was devastating for futures market investors who were hoping to take physical possession of oil after the contracts expired. As the oil delivery date approached, futures traders began a massive sell-off to get their contracts off their hands. This caused prices to drop quickly. Meanwhile, major companies such as Exxon, Chevron, and ConocoPhillips announced production cuts. Additionally, Giant Whiting Petroleum became the oil industry's first major company to file for bankruptcy in April 2020. Over the next few days, the historic drop affected the entire US financial market, causing the Dow to plunge more than 1,200 points in just 2 days. This fall was absolutely different than any price you might be thinking of, because for the first time in history, oil traded at negative $37 per barrel. Syed Shah had bought hundreds of oil futures contracts during this record price plunge, unaware that he had just sealed his fate. Due to a technological glitch, traders using interactive brokers were unaware that the price was negative until they were informed that they owed an absurd amount of money. Imagine this. You just woke up early in the morning and decided it was a good idea to invest $2,400. You're not the Peter Lynch of finance, but you think now is a good time to buy some oil. Then you just get screwed. Your $2,400 invested and the $77,000 in your account just turned into a multi-million-dollar debt. The best part is that you don't even have a way to pay it off. This just straight up sucks. When Shah saw oil collapse, he brought 212 contracts thinking the price per barrel was 1 cent. In reality, oil was trading at negative $3.70 per barrel. Unfortunately, the interactive broker system was not designed to show a price below zero, so the broker's investors found themselves trading virtually blind. That's how a lot of people ended up losing their money. So he did what any 30-year-old adult would have done. He freaked out like a 6-year-old watching Friday the 13th without his parents' permissions, and went 3 days without sleep. He was convinced they were going to take all his assets. So yeah, I wouldn't have wanted to be in Syed's shoes. However, Syed Shah wasn't the only trader to end up immensely in debt. In Europe, another interactive broker's client named Manfred Kohler faced a similar situation. So let's see what was happening on the other side of the ocean. On April 20, Manfred Kohler was in Frankfurt, Germany, when he decided to buy oil contracts for his friends for $11, between $4 and $5 on the platform. However, his trading screen froze at 2 p.m. The price feed went black from one moment to the next and there were no more bids or offers, yet his account seemed to be running smoothly. At least that's what he thought until he received a notice that he owed $110,000. That's what I call being out of luck. But who was to blame for all of this mess? Did these victims ever see their money again? And what can we learn from interactive brokers' mistakes to apply to our businesses? 5 days before the chaos broke out, the CME warned that benchmark oil contracts could turn negative, and it sent a message to all its clearing member firms advising them to test their systems using negative prices. Although interactive brokers received that alert, they could not implement these changes in time. They barely had 5 days to incorporate them, and their staff was paralyzed because of the pandemic. That's why guys like Syed Shah and Manfred Kohler got caught in the crossfire of oil price collapses. The good news is that the company's founder and president, Thomas Petterfy, said he could take care of the problem and reimburse his clients for any losses they suffered below zero. The bad news is that his little mistake cost the company between $88 million and $109 million, and that is how a system error caused one of the greatest financial problems of all time. Please watch the next video on screen and make sure to like and subscribe, and do leave a comment of what you'd like to see next. Thanks!